What is the ECB's inflation target? Imagine trying to keep prices steady in a big economy. That's exactly what the European Central Bank does. It works to keep inflation at a specific level so prices don't rise or fall too much. The goal is to make sure money keeps its value over time. The European Central Bank aims for an inflation rate of 2% over the medium term. This means they want prices to increase by about 2% each year, give or take a little. This target is symmetric, which means the bank is just as concerned if inflation goes above or below that 2% mark. They see both too much inflation and too little inflation as problems. Why 2%? Well, the bank believes this level helps keep the economy stable. It encourages spending and investment without letting prices spiral out of control. It also helps people trust that prices will stay fairly predictable in the future. The European Central Bank measures inflation using a tool called the Harmonized Index of Consumer Prices. This index tracks how much the prices of goods and services change across the euro area. The bank's focus is on the medium term, which means they're okay with short-term fluctuations. If inflation drops below 2%, the European Central Bank might allow it to go slightly above that for a while. This helps prevent inflation expectations from falling too low, which could hurt economic growth. In 2021, the European Central Bank officially changed its inflation target to be symmetric. Before that, they aimed for inflation to stay below but close to 2%. Now, they treat deviations above and below equally. This shift helps them keep inflation expectations more firmly anchored around the 2% mark. To reach this goal, the European Central Bank uses different tools. They can change interest rates, making borrowing more or less expensive. They also buy assets like government bonds to influence the economy. These actions help steer inflation toward the 2% target. In short, the European Central Bank's inflation target is a steady 2% over the medium term. This helps keep prices stable, supports economic growth, and ensures the euro's value remains predictable. The bank's job is to balance these factors carefully so the economy can grow smoothly without sudden price swings.